Well, good morning. How's everybody today? January 25th. We are going to try a metals mining basket today. It's been a little touch and go trying to find trades because of the earnings dates on things. We try to give a little bit of time before those. But here I think we found one that was interesting. Here it is. It doesn't have a totally awesome correlation, but it's got a very good RW coefficient. And it's down below the second standard deviation. Let's take a quick look. So the earnings date here is the 21st of February, so we've only got a few weeks on this. But the pair itself, if we're looking out here on this side, looks pretty good, I think. I think it's just pulling it down. Hold on. A little slow today. Here we go. So from here out, it looks very flat. I mean, it's a good picture anyway, and it had a strong move down, and it's already been started a motion back up over the past couple of days. During this time frame, it's got the shape that I like a lot. The return to the mean now is still saying 40, so I doubt that we're going to make it back to the mean, but we've got a little bit of room we're going to play with here. We'll take a look and see. The drift is less than a penny, slightly down. But overall, it's a good looking shape. Okay, I wish we had more time for the earnings, but that's okay. We'll just run it out here. While that's loading, I don't know how many of you are following the pairs that we're recommending overall, but I did close a handful of those yesterday because they're approaching earnings dates, and I do start to watch that 3 or 4 days before the earnings date. So I went ahead and closed, I don't know, maybe it was 6 or 7 of them yesterday. Okay, so here we are. This is a very nice shape, very good, and it's already started a motion back up. So this could be a good opportunity to make this trade. Let's take a look at the hitting probabilities. Okay. So it's saying a target price of 171. I don't think so. We'll run the simulation once and we'll see. We'll leave that at 18 days. That seems to work out okay. So it's saying the mode is 28 days at 171 and 55 days, to be half the time there. And look at this, it's only saying that we're going to be above 515 73% of the time. Of course, I would prefer that to be in 18 days. So that's 3 out of 4. That's not really perfect, is it? But it might be what we have to live with on this recommendation. You just have to watch it carefully. Let's try a different number on the mean, however. We're down here. So we have room to shorten this, let's say, we can try it at 0. We can try it. Let's try it at 0. See what we get here. Okay, at 0, it's still saying 34 days to have half the time, but the mode is actually 10 days. It's just that most of the results fall outside of that. I'm gonna tighten it up just a little bit more. One more time. I'm gonna put it at -1 and see what it says. That gets that 50% down to 21 days, which is inside of the number that we're talking about. So I think we're going to go ahead and I'm going to put this as a target. I think it's certainly more realistic than what the mean is, given the time that we have. We're only a 3 out of 4 chance of finishing in the money on this one, and okay, in most people's books, a 3 out of 4 is not bad, but we have seen much better numbers than those, of course, otherwise. So let's make this the recommendation. It's ANV minus 1.3 of CDE. It's a long, so for every share of ANV that you buy, you're going to sell 1.3 shares of CDE, and we're going to make the target be -1, somewhere right around the what is currently the first standard deviation line. Good luck with your trading today.